Okay, so welcome. If you're listening to this as a recording, this information is provided as of April 7th, 10 a.m. Eastern Standard Time. Welcome. I'm Ronit Holtzman, Senior Vice President, Philanthropy for the Jewish Foundation. We would like to thank you all for joining us this morning for what promises to be a very informative presentation. Looks like there are about 100 people on the line, which is terrific. We'd also like to thank our PAC sponsor, April Bonds, for their support. They've been a wonderful partner for several years, and we are delighted that they're still with us. Like all organizations and businesses, the Jewish Foundation and UJ Federation pivoted to working from home more than 3 weeks ago. During these last few weeks, UJ has engaged more than 1,800 volunteers in a myriad of tasks. Some are making wellness calls to members of our community, others shopping for groceries on Instacart for our seniors, and more than 200 packed Passover food boxes to make sure nobody was left behind. The Jewish Foundation has been working with our fund holders and the institutions we support to ensure now more than ever, we are able to continue to process grants and get funds into the hands of those who need it most. For you, our advisor community, we are committed to providing as much up-to-date information as possible through webinars, Zoom calls, and emails. COVID has brought much of the global economy to a standstill, hurting all markets, especially commodities and other resources. No one on our investment committee could have predicted what has just happened, but the committee has always been focused on volatility and downside risk, which has helped us during these difficult times. The Foundation's investments have been more globally oriented than many other Canadian foundations and equities, with only 10% of our portfolio in Canadian stocks. It's different for us, though, in fixed income, where all of our traditional bond exposure is Canadian, focused on government and high-quality corporate bonds with some new additions of Canadian mortgages. You may be interested to know that our investment committee has stepped up its meeting schedule to almost weekly to re-examine and reaffirm our long-term investment strategy. We are retaining slightly higher than usual levels of safe assets like cash and fixed income to meet the needs of our community as they arise during this health crisis. And if you or your clients are fund holders, we are encouraging you to spend your charitable dollars and help us safeguard our community's future. Before I introduce our speakers today, I just want to let you know if you would like to ask a question, please use the Q&A function at the bottom or top of your screen, not the chat function. It is now my pleasure to welcome today's speakers, Dov Begun, Partner Taxation, Osler, Hoskin, Harcourt, LLP, and Jamie Golombek, Managing Director, Tax and Estate Planning, CIBC Private Wealth Management. Jamie?
Thanks very much, Ronit. Our agenda today is pretty simple. We're going to go over some personal tax measures, some business tax measures, and then Dov's going to talk in detail about the wage subsidies. Lots of information. Just a reminder that this is as of April the 7th, Tuesday morning at 10 a.m. Eastern Time. New announcements could come within the hour of Prime Minister's press conference. So this is up to date as of this morning right now. So let's begin. There's lots of information. We're going to give you some references here. You'll be able to watch a replay of these. We've written a number of bulletins, both myself and Dov's group, on some of the tax measures. The personal tax measures are all covered in this recent CIBC bulletin, which you can find online or by Googling it. So the first measure that we'll talk about today is, of course, the CERB. And again, I'm not going to go over all these details. I assume that most of us on the call, judging by the list of attendees, accountants, lawyers, and other financial professionals, are very familiar with the high-level rules. So again, just going to point out a few key points on some of this. The CERB is really meant for people who stopped working, period. You've either lost your job or you're employed, but you're not being paid, you're sick, you're taking care of someone who's sick, or you're taking care of children. You can't just quit a job and go on the CERB. So, I mean, the question that remains is, what about people who are working a little bit? And yesterday, on Monday, the Prime Minister announced that they may be changing these rules, and that could come as soon as today or tomorrow, to allow people to have a bit of part-time income, a bit of hours, something like that. We don't know how it's going to work, and still be able to claim that CERB. The eligibility, you got to be 15 years old, a resident of Canada, have a social insurance number. You have to have had more than $5,000 of either income or self-employment income either last year or 12 months prior to the particular application date. And in addition, you cannot expect to have any income for 14 days in those first four weeks. And in subsequent periods, when you reaffirm online, you also cannot expect to have any particular income. Now, CRA did answer a Q&A on the website late on Friday, on the very end, and they said that if you were an individual who maybe received a private company dividends, non-eligible dividends that was greater than $5,000, you would qualify. Normally, that's not employment income or self-employment income, but they seem to be sort of bending the rules a little bit. So we'll wait to see if that's formalized, but that is on the CRA website. The benefits are $2,000 per month. That's $500 a week for 4 weeks. It is taxable. There's no deductions at source coming off that. So you got to remember that you got to save money for the taxes on that, depending on the marginal rate in the year. Any 4-week period that begins March the 15th to October the 3rd, you have to apply separately each time. The last date to apply is December the 2nd, and you can't get both EI and CRB for the same period. Now, it's going to be administered by the CRA. You can use the CRA's My Account system or automated phone system. And that started yesterday on Monday, April the 6th, 2020. They are encouraging Canadians to apply based on your birth date. So in other words, if you were born in the month of January, February, March, you apply on Monday, et cetera, as this chart shows you. Now, I thought I would test the system, so I went online yesterday and I did it myself. I didn't actually apply because I'm still being paid for now. But you go online, you sign on to My Account, and you click Apply. That takes us to the next page. You choose a period. So if you click on Select, you hit Next. I chose the first period, March 15th to April 11th, 2020. If you click on Next, this is where it gets really serious. You got to certify all this. All the conditions I just talked about. At that point, you click on Yes, I meet the criteria, and hit Next. That's where I quit because I'm not eligible. So the question often comes up, what about CRB and EI? How does it work? Again, the rules are pretty straightforward. If you were eligible to get EI before March 15th, you're going to continue to get EI. And if your EI ends by October the 3rd, then you can apply for the CRB. If you became eligible after March the 15th, you're automatically going to get the CRB. And if the EI was more, you'll still get your EI later. Your entitlement EI won't be impacted, but they've now affected all applications after March 15th under the new CERB system, which is an automatic $500 a week. There's no reduction. Now, a couple of other things very quickly. There's a special GST credit payment. So again, if someone was eligible, low and modest income, about 12 million families are expected to be eligible for this. They're going to be a special one-time payment. They just advanced that to April the 9th. Through the GST system. It's an automatic direct deposit, $40 for singles and $600 for couples. So when people ask me, what are retirees getting, what are seniors getting, I say if you're low and modest income, you're at least going to get the GST because you're not going to get any of the other benefits if you didn't have any other employment income. In addition to that, for those who have children under the age of 17, depending on family income, there is a Canada Child Benefit. That's going to be a one-time $300 increase. That's going to be paid in the month of May. So these are the benefits. If you add $300 to it, you get the new maximum benefits on the right column. The next topic to talk about very briefly is the lower RRIF minimum. CIBC just published a publication on that, going over all the details of lower RRIF minimums. In a nutshell, it's pretty straightforward. If you take a look at this chart, you can see that we have reduced the RRIF factors by 25%. So someone who was 71 at the beginning of this year now has to only take out 3.96% of the opening fair market value as opposed to the 5.28. That's right across the map. If you're under 71, just use the formula at the bottom of that particular chart. A couple of examples just to show you some practical issues. If someone that was a RRIF at 71 at the beginning of the year, and normally they would have taken out 5.28, now they only have to take out 3.96 or 39.60. If you are an automatic RRIF withdrawal program, this is where it gets a little bit interesting. So let's say someone was 71 at the beginning of the year, they withdrew the old minimum, effectively the 1,320, which is the minimum of the 5.28%. You see in the footnote, divided by 12 is 440 a month, times 3 is 1,320. And what they can do, of course, is they can reduce the minimum for the rest of the year. So one way to do that is just stop withdrawals altogether. And effectively what you're doing is being able to take out the rest, lower the remaining withdrawals. So you take the dividing amount, you can then divide it by 6 months or 9 months. There's different ways to be able to do that. But the bottom line is that you still have to take out the minimum, the reduced minimum, and it will depend on your RRIF carrier as to how you're actually going to process that. Because some people will be able to process it automatically. It may take a few more months. We don't know if financial institutions will actually be able to automatically readjust the RRIF withdrawals for you. So again, speak to your advisor, speak to your RRIF provider to figure out how that's going to work at your institution. And one just quick point on the withholding taxes. They're not changing the threshold. So if someone was 71 at the beginning of the year, they're $100,000 of RRIF, and they are taking out $8,000, we know that there is no withholding tax on the RRIF minimums. The withholding tax only applies to the excess of the RRIF minimum. So if you're using the lower factors, so $8,000 less than $39.60 is $4,000, you'd have the 10% withholding tax. But what we're doing instead is using the regular factors. So the legislation said that we are not changing the amount subject to the non-withholding. So effectively what that means is on the $8,000, we're still using the $59.80, and therefore there'd only be $272 of withholding tax. So we're using regular RRIF factors, not adjusted RRIF factors, to determine whether or not we withhold on the minimum amount. All those details are in that RRIF bulletin. And then finally, not a lot in the budget so far, not in the budget in the legislation so far for students. We expect further announcements on that this week. Mr. Trudeau yesterday said that they are looking at the students who don't have summer jobs, don't have part-time internships, graduate scholars, things like that. And they're looking at enhancements for students, tuition assistance, things like that. Right now, the only thing official as of today is that student loan and apprentice loans, there's a moratorium on repayments and interest charges from the end of March to the end of September for 6 months. No interest and no repayments required on student loans. A couple of reminders on the filing deadlines for the 2019 returns. 2019 T1 return normally due April 30th, extended to June the 1st. Self-employment, no change, still June the 15th. And your installment payments, your balance due date, again, for the return is September the 1st. And the installment, the June installment, is now also delayed until September the 1st. For trust, the 2019 T3 return normally due 3 months after year end. That was also extended formally to May the 1st, 2020. And then just a few minutes on the business tax measures, and then we'll get to the wage subsidies. Again, we've written a report at CIBC specifically for business owners, and some of the relief measures I'm going to talk about very, very briefly that go through that other than the wage subsidies, because Dov's going to cover that in detail. So first of all, filing deadline, the T2 returns. If the T2 return was due anytime between March 18th and May 31st, 6 months after the year end, then we have an extended T2 deadline of June the 1st. Payments, no changes there in terms of when the corporate payments were due, but installments, any installments due from March 18th to August 31st were delayed, and you can pay them now by September the 1st. For partnerships, the return date has been pushed off from March 31st normally, and now it's been extended to May the 1st, 2020. On the loan side, just a couple of points here. The Canada Emergency Business Account, that's the $40,000 loan available to businesses and charities, not-for-profits, guaranteed by the government, but administered by your local financial institution. So you have to have paid between $50,000 and $1 million of payroll last year in 2019, as evidenced by your T4 summary of remuneration paid. If this applies to you, you're going to get the $40,000 up to $10,000, and that's 25% of it can be forgiven, as long as the balance is repaid by December 31st, 2022. You just have to apply for this through your financial institution at CIBC. We have this all online. You have to be your regular financial institution where you have a business, has to be a corporated business, and that business has to have a business existing relationship already with the primary financial institution. You go online, you apply, and there are no payments, no amortization of this. Pay off by December 31st, 2022. It's interest-free, and $10,000 can be forgiven. You can then roll it into a regular loan for 3 months, 3 years, sorry, and there are no payments required for 3 years on that, but then interest would be charged. And then finally, in terms of other loan and guarantee programs, there are some other programs set up through the Business Development Bank and EDC, incremental credit amounts up to $6.25 million per company. More details of this program will be released later this month, later in April. More information also is in our bulletin. And then finally, GST and HST, normally they're due by the end of the month following the vendor's reporting period. They've extended this remittance deadline until June the 30th. So for a monthly filer, any GST or HST you collected February, March, and April, pay on June 30th. Quarterly filers for the first quarter, pay on June 30th. If you're an annual filer, anything you collected for last year, plus any installments for current year, are again due on June the 30th. At this point, I'm going to turn the call over to Dov Begun. He is going to discuss in detail the wage loss subsidies, the two of them. And then what we're going to do is we're going to do some Q&A. Dov, over to you.
That's great. Thanks very much, Jamie. So I'm going to talk about the 75% Canada Emergency Wage Subsidy, which unfortunately doesn't have a very good acronym, CEWS. I'm not sure if there's a better way to say that. And also just a little bit of time talking about the 10% temporary wage subsidy. So one thing I'd like to actually just point out before I get into this is I know that there's, there's been lots of material in the press and kind of people from different interest groups saying that this may not actually work for them or their particular industry or their particular entity. We'll get through we'll talk about some of those issues as we go through the slides. But I would like to say that, I do have a little bit of empathy for the CRA. I mean, this type of program, both the material that Jamie was talking about and the emergency wage subsidy program, there's obviously a lot of detail. These types of programs could take anywhere between 8 months, 10 months to a year to actually fully develop and finance before they release them, before they release any type of draft legislation. So one of the things that we'll see as we go through it, the material that are on these slides are really pulled mainly from two sources. One from the finance minister's press release of last week, and then there was a backgrounder that was released and which is available on the finance website. There are also some links in the materials where you can read up on some of this, but there is no draft legislation. So there's no notice of ways and means motion. There's no draft legislation that has really come out. So yes, there are a lot of questions. There's a lot of uncertainty. The finance minister has indicated on a lot of different fronts that they're prepared to be accommodating. They are willing to sort of be flexible and adapt. But let's go through the material, and then I think we'll see where some of the pressure points may be. So what is this plan? The 75% Canada Emergency Wage Subsidy Plan is really a program that's intended to assist employers who have experienced significant decline in their revenue during the period of the current situation. And it's intended to allow them to keep existing employees and rehire previously laid off employees. And I think that's very important to keep in mind, because again, it will inform some of the questions and some of the different considerations. The objective of this plan is on the payroll side. So the objective is to assist employers to keep their employees working. And I think that's an important overarching principle to think about as we go through these slides and try and understand this program. So who does it apply to? It applies to both small and large employers. It is a 75% wage summary of eligible remuneration paid by eligible employers. In the following slides, we'll go through what is eligible remuneration, who is an eligible employer. It is currently for a 3-month period. It's retroactive to March 15th, 2020. And one important element is there's no limit on the aggregate amount of the subsidy. And really what we mean by that is there are limits, obviously, with respect to particular employees, but there's no limit on the employer side in terms of the aggregate amount of the subsidy that they are eligible to obtain. So if we move to this concept of the revenue decrease, so the threshold for eligibility is you have to have experienced a decrease in revenue of 30% or more during this period. So how do we calculate revenue? Revenue is calculated according to the backgrounder using the employer's normal accounting method, and it excludes revenue from extraordinary items, amounts on account of capital, those types of things. And the way it's parsed is into these eligible periods. So the first period is March 15th to April 1st. and sorry, March 15th, April 11th, and that's intended to cover a reference period or revenue period from March 20 over March 2019. So you look at your revenue in March of 2020, you look back to see what your revenue was in March of 2019, and then you see whether you've met this 30% revenue decrease. And that's a test that you actually have to do for each period, and you have to reapply for each period. So who is an eligible employer? So eligible employer, obviously, you first must have suffered this drop in revenue of at least 30%. So your first threshold is, I'm someone who has experienced this 30% drop in March, April, May of 2020. And then I'm an individual, taxable corporations. The next bullet point is actually quite important. The publicly listed, so public corporations and Canadian subs of non-Canadian corporations can also be eligible. One of the things, at least before some of this material came out, there was some suggestion that maybe this wouldn't apply to public companies. There was also a comment that the finance minister made, just in some terminology, where I think he used the term publicly funded bodies. Anyways, it was made clear in the backgrounder that was released after the press conference that in fact publicly listed corporations would qualify. I was actually just looking at some of the notes I was taking during the press conference, and I actually wrote down something along the lines of, well, public companies are not eligible, but that's clearly not the case. And clearly public corporations are going to be eligible for that. So partnerships, so if a partnership consists of eligible employers, they're also eligible for this subsidy. Nonprofits and registered charities are eligible. And then there's a list of ineligible employers. So who is not eligible for the subsidy? Public bodies, basically meaning municipalities, local governments, crown corporations, universities, hospitals, and the like. So then we go to the subsidy amount. So again, when you read the backgrounder, initially it might be a little bit confusing in terms of how they've set this up, but the general concept is there's really a bit of a difference between existing employees and new employees. But the subsidy is generally equal to 75% of the eligible remuneration that was actually paid, up to a maximum of $847 per week. And the reason I'm parsing some of those terms is because for existing employees, you could obviously foresee a situation where somebody may have been making $1,000 in this pre-crisis period, but then during the term of this period, they had their wages reduced. The intent of the plan is to allow for 75%, a subsidy of 75% of the pre-crisis wage, even though some of these employees may have been paid less or may currently they're being paid less. So there is a bit of a difference between existing employees and new employees. New employees, it's an actual 75% versus existing, that there is this ability to leverage off of what they may have been receiving prior to the crisis. There's also a reference in the materials that the employers are encouraged to use their best efforts to pay 100% of the pre-crisis wages. Again, pre-crisis wages. Again, remember that the objective here is to try and ensure that we're keeping employees employed and on the payroll. There is no guidance. The material really did not provide much in the way of specific guidance as to what best consequences for failure to do so, but employers are encouraged to use best efforts to pay that amount. Okay, the last point here, which is obviously one that's very important, is the subsidy is taxable as government assistance in the year of receipt. So that's something that you have to bring into your income. So on this slide, really not much new from what we've already said. Again, just pointing out that existing employees, even if you paid them less before, you may be able to take advantage of 100% of the pre-crisis weekly remuneration. And then from the concept of salary, wages, and other remuneration, what is it? Well, we know that it specifically excludes things like severance pay, stock option benefits. So any benefits maybe that would have been realized in a brief period for exercising stock options, as well as the personal use of a corporate vehicle. So those are all carved out of what is considered eligible remuneration. So some other considerations, there is a specific rule for employees who are non-arm's length to their employer. And by that, we typically mean an individual, for example, who might be operating through a professional corporation. The subsidy amount then is limited to the actual amount paid. So it's eligible remuneration, which is actually paid up to, again, this maximum of $847 per week. 75% of the pre-crisis remuneration. So there's that test for non-arm's length employees. There's been some concern about whether this revenue test is appropriate for charities or not-for-profits. Arguably, it's not. The minister has indicated that consultations are ongoing and they're continuing to explore what might be, or perhaps would be a more appropriate test for charities and not-for-profits. But as of this point, unless there's something going on while we're speaking, which is very possible, as Jamie said earlier, we do not have any specific guidance. Now, one of the comments at the press conference after the finance minister spoke, there was a specific question about, well, what about startups and technology companies? And we actually have a very helpful slide here, which I think is indicative of a situation where somebody may have experienced really significant revenue growth, but not in the right period, and therefore you actually may not be eligible. So if you just quickly look at this slide, which you should see up on your screen, this is a situation where, if we're looking at the particular reference period of March 2020, which is the last, I'm pointing at it, but obviously you can't see that, of March 2020, which is the last bar at the end on the right-hand side, our reference period our revenue reference period of March 2020 back to March of 2019, which is that red line running across the x-axis there. You'll see that there is a clear, we only have a 9% drop in the revenue, so we don't meet that more than 30% test. But if you look at the scale-up growth that this entity has experienced, they have had material increase in their revenues, just not in the appropriate period. So this would be a situation where they might feel inappropriate, that it is inappropriate that they're not eligible for relief, or the subsidy relief. And again, the finance minister indicated that they are attuned to some of these issues. We expect to see some modifications made in the coming days. At this point, though, we don't have any further guidance. But I think this is just a helpful little chart to see how that could really manifest itself in a real-world example. Okay, so just quickly running through the last couple of slides. When we get to administration, so this 75% subsidy is actually a refund. So unlike the 10% temporary wage subsidy, which we'll talk about in a minute, which is also called a subsidy, that one is really just a reduction in your remittance. This 75% subsidy is actually a refund. And if you think about it intuitively, it makes sense, because 75% is obviously just based on the numbers. You wouldn't have enough to reduce your remittance in order to make this work. So it really has to take the form of a refund. From an administration perspective, there will be an application through a CRA online portal. Further details are expected to follow as to how that's going to work. At the time of the application, the employers are basically obligated, or will be obligated to attest to the decrease in revenue in order to qualify for that subsidy. And they're also going to be required to keep records demonstrating the reduction in revenue, as well as the amounts of remuneration that was paid. So they're going to have to keep records of all of that. And this is something, at least in its current construct, that employers are going to have to apply for each month. So every month that your revenue is decreased, you can, over that period, you'll have to reapply for the subsidy. Now, in terms of what happens if the employer is subsequently determined to be ineligible, so obviously they will be required to repay amounts that they may have received under the program. And there was quite a bit of time taken to directed to the point of anti-abuse rules, and again, no real guidance on it, but they did make the point that anti-abuse rules are going to be proposed in order to ensure that the subsidy is not inappropriately obtained. They're also considering proposing new offenses to address organizations that may provide false or misleading information to access to subsidy, or who misuse any of the funds that are obtained, possible fines, imprisonment. Again, not a lot of detail, but definitely they're taking this quite seriously. So now just moving very quickly to this 10% temporary wage subsidy. Interestingly enough, the 10% temporary wage subsidy is something on which there is some legislation. There was a notice of Ways and Means motion, which is really just sort of draft legislation, which was released now probably already about 10 days ago. And then subsequent to releasing the notice of Ways and Means motion, there were some changes to the program as well. There were some terms obviously were not defined, but what this is, as I said, referred to as a subsidy, but really the relief takes the form of a reduction in the amount of income tax that would be required to be remitted. It's not something that can be used to reduce the remittance of CBP or EI or any remittances to Revenue Quebec, but it's a 10% of remuneration that is paid from a particular period, this March 18th to June 19th. It's capped at $1,375 per employee, and there is a cap of $25,000 per employer. The universe of employers that can apply for this, that are eligible for this, is much smaller than the 75% subsidy. CCPCs, Canadian Controlled Private Corporations, that is, that have taxable capital less than $15 million can apply. That has to be done calculated on an associated basis. Charities, not-for-profits, individuals, and partnerships are eligible for this 10% subsidy. And then in terms of whether companies can get both, companies can get both, although the government did point out that if there are organizations that don't qualify for the Canada Emergency Wage Subsidy, you can continue to qualify for the temporary wage subsidy, but there is no real duplication. So benefits that are received under the temporary wage subsidy will actually reduce your entitlement that you may have under the emergency wage subsidy. So that's pretty much all we have in terms of formal slides. You know, people, I haven't had a chance to look at them while I've been talking, but I know I've seen some questions kind of roll in while Jamie and I both have been talking. If you have any questions on any of the materials that Jamie and I presented, feel free to submit them. Jamie, if you want to, I'll look at some of these while I stop talking, and perhaps Jamie, if you want to look at a couple. And we're going to try and do this sort of a little more interactive, again, appreciating that there is not a lot of material there. There are a lot of questions in the real world application of some of these rules. So hopefully we'll get some good, unfortunately not real back and forth discussion, but between the two of us. Sorry, Jamie, you're on mute. I can't hear you.
There we go. Sorry about that. Yeah, we've got about a dozen questions, and we'll try to get through most of them. And you know, Dov will just jump in, and we'll just see what we can do. I'll try to answer the easier ones first, and then leave the hard ones for Dov, and let's see if we can get you some of the answers. We may not have all the answers. So the question, one of the questions that came up is, can a sole proprietor use the 75% wage subsidy to keep an employee and also claim the CIB for himself? And does the answer change if the wife is the employee who actually does work and meets the criteria of 20 hours a week? So I think they're two separate things, right? So the wage subsidy is available to all employers, including those who are self-employed. But again, you've got to have an employee. And in other words, you've got to be T4ing them and doing the proper remittances and things like that. So, I mean, I think that's critical. So I think, yes, I think you would be able to get the 75% wage subsidy to subsidize the employee. Again, you have those special rules for non-arm's length. It's got to be pre-crisis wages. If you've never paid the employee before, you've got to look at what you paid them historically, and then you're limited to that 75% test. In terms of claiming the CRB for yourself, again, if you don't have any income in a 2-week period, like zero income under the rules right now, then I guess you could claim the CRB. But again, you have to have no income, right? So it's an interesting question. Yeah, go ahead.
Okay, so I'll just pick up a couple. Thanks, Jamie. So one question which came up, which is an interesting question. You know, we've said in order to show the revenue, you actually have to, in order to show this 30% decrease in revenue, it has to be calculated using your normal accounting method. So one of the questions that had come in was, you know, what if you're on an accrual basis, but you go to a cash basis, or vice versa? Now, it's a good question. That's the type of thing that we'd expect to see maybe some more guidance on in terms of draft legislation. Most businesses are obviously required to use an accrual method. There might be some businesses that work on a cash method. All we have is the material in the backgrounder that says revenue calculated using normal accounting method. So I could definitely see a situation where a business may have past practice of using a particular accounting method, and then all of a sudden tries to change it to get the desired result. And I could see the CRA saying, sorry, that's just not a normal accounting method, and therefore you don't qualify.
And it raises a great question that Dov and I were talking about last night, and that was specifically the issue of, you know, if you're using accrual accounting and you're estimating your collectibles and things like that, like how big a reserve for downfall accounts can one take legitimately for the month of March to show a decrease in revenue. So we don't have the answers, but I'm just warning the accountants, everyone, just to be careful, certainly in that area.
Another question, which I've actually, this is a real world question, sort of a practical application of this, and it relates somewhat to some of the questions that have been coming in either with clients that are in a real estate business and they don't have, either the revenue is lumpy or the revenue all may come in at a particular point in time. I have a question of a corporate group that operates by divisions. So they don't have corporate subsidiaries, but they have numerous divisions, many of which may have been impacted by this crisis and therefore have experienced significant revenue decrease. Others maybe are flat, others may be up. And the question was asked, well, can I look at this on a division by division basis? And at this point, I would say the answer, no, I don't think you can. I think you have to roll everything up into the parent or into the main operating entity. And you may find yourself that on an aggregated basis, you don't have a 30% decrease. You may be up, maybe 5%, even though some of your divisions that may house employees in that particular division have been significantly impacted. And you could also foresee a situation where you have a corporate parent that is we would call it, the employee co, right? They have all the employees in that entity and they hire them out or they contract them out, or either through intercompany arrangements with other companies in the group. And some of those companies, again, may be up, some may be down. All the employees, all the payroll is up in the corporate entity. So clearly there are a lot of issues. We don't have an answer. I think the division one is probably one that is maybe a little bit easier to answer, although maybe a bit inequitable in terms of the application of the rules.
Yeah, I suspect they have to have some kind of rule with these consolidated groups. So where you have an employee co, they have to do something on an aggregated, consolidated basis based on how companies are set up. So I think that's an important consideration. We'll have to wait to see. We got another question that came in. If the March decrease in revenue doesn't qualify as shown for the 30%, are we still eligible for the 3 months for the next period? And the answer is yes. So we have the 3 periods listed on a slide there that sort of looked at when your revenue measurement period is. So even if you don't qualify for that first month, then you certainly could qualify in subsequent months. So that's a common question for sure.
One question which is actually I've seen come in multiple times. So we did address it in the slides, but perhaps not, I want to just call it out because I see this question coming in. One is the sort of related, how are the mechanics of this emergency wage subsidy going to be administered? But more importantly, will it have to be reported as income for the corporate employer? So absolutely, clearly, yes, that is the subsidy is the amount that's going to be brought in to your income. It's taxable to the employer. In terms of the administration, again, that's going to be administered through a CRA online portal. There will be requirements for employers to keep records of attesting to the decrease in revenue as well as the amount that's paid. Further details are expected to follow on how this application process is going to work. We don't have them yet, but I would suspect that this is the type of thing. Remember, the CRA always has the benefit of 20/20 hindsight, so they can see everything after the fact. Keep as much in terms of record keeping as you can, because a lot of this is going to be filled in after the fact.
We got a few questions on the CERB, the emergency response benefit, and I'll just try to answer a few of them all at once. So one question was, is the $5,000 test that you have to meet gross income for self-employed individuals? I would think it would be your net income as reported. So if you look at the 12-month period to qualify, you have to have $5,000 in the previous year or the previous 12 months. And I think typically net income would be the appropriate calculation, just like you'd have that on your tax return, your net income when you report that. Another question came in earlier: how much revenue can someone who's self-employed earn to apply for the CERB? Well, again, we're looking at sort of net income. You have to really have, I think, no income right now under the rules, unless they change it the next day or so. The current rules say you can't have any income at all to get the emergency response benefit for a 2-week period. So again, I would look at sort of your net income, the way you normally do your accounting. And we had one other very interesting question that came in as well. You have an unincorporated lessor, in other words, someone who leases a property they have two tenants, one's a restaurant, one's a church, they both closed down. Can the lessor get the CERB? And again, remember, CRB is based on employment or self-employment income, not on investment income, property income, leasing income. So even if your leasing income goes to zero, that's not the relevant test. The relevant test is, did you have employment income or self-employment income of $5,000? And if you did, then you may qualify if you have no employment income in the 2-week period.
A couple of other questions that have come in. One was actually a couple of them, again, dealing with the technology companies and startups in terms of how do you show the reduction of 30%. A very good question. There is no answer in terms of any special rules or dispensation that may apply to technology companies or startups that may, under the current construct of the plan, not meet this 30% reduction when you're looking at the period of March 2020 back to March of 2019. So all we can say with that is the minister has acknowledged that there could be some inequities there, and they're looking at either some possible amendments to the proposal or some modifications. At this point, there is no separate regime, or there are no different accommodations that are provided for technology or startup companies, although we expect that, especially with this government, they've been very amenable to technology companies, startups, emerging high growth companies. So we would expect to see some modifications, and there have been some submissions that are informally being made to finance. And then one other question which has come in and sort of related to this, and Jamie, we can push this one back and forth, which is, how is the government going to pay for all of this? And that has sort of come in as a question of, how is the government going to pay for, pay for this? Capital gains going up, what's happening with taxes? So those are sort of all related. I'll just sort of start off, and then I think Jamie will obviously have some very prescient views on this as well. Whether capital gains are going up, we've already seen, the budget has been somewhat indefinitely delayed. Clearly, they were looking at changes to some of the stock option rules, which were expected to come out in this budget, which again have been delayed. Our capital gains rate is going to go up. There's been we haven't really seen anything in writing that suggested the capital gains rates will go up. Whether they can get that through is another question. But you're right. I mean, the price tag on, I think just on the 75% emergency wage subsidy is about $71 billion or so. So whether taxes are going to go up, whether capital gains rates are going to go up, whether the stock option changes are going to go through. Personally, I think the stock option changes will go through once the budget comes out. Whether capital gains rates will go up or taxes will go up, it's somewhat hard to think that they won't, although query whether they can get that through. Jamie?
Yeah, I mean, I don't think they're going down. Let me put it that way. I mean, obviously this is an enormous serious situation for the government. They're doing everything they can to try to get money to individuals who need the money. $847 a week, that's sort of the yearly maximum tangible earnings, sort of an average sort of middle income wage for Canadians. So, it's the right thing to do from a policy perspective. It's just going to be expensive. So, if you're looking for massive tax breaks in the next year or so, probably won't happen. Capital gains, as I've said many times, inclusion rate of 50%. There's been a lot of speculation, that it would go back up to 2/3 or 3/4. Obviously now the economic pressure, it could make that even higher. The desire for them to raise that rate, surplus stripping, people are going crazy with surplus stripping transactions the last few months. If you bump up the capital gains rate, then you get rid of some of that potential to surplus strip depending on the rate. So I think it's possible. You certainly had a minority government, and you had the opposition sort of advocating for that in the pre-election. Obviously, we're in a different world right now. So I think certainly it's possible. So that was an interesting question. There was one simple question on RRIFs, I think that I can answer pretty quickly if I can find it. Are people who collect the RRIF eligible for the emergency response benefit? The answer I would say is maybe, but probably not unless you have employment income, right? So we get a lot of questions from seniors and retirees, like, what's in it for me? And in most cases, the answer is nothing. So if you're a retiree or you're a senior and you're not working and you don't have any self-employment income, you can't get the $2,000 a month, period. So what can you get? You can get a RRIF minimum reduction. If you have a RRIF, you can reduce it by 25%. And the other thing that you can get, of course, potentially if you're a low middle income senior, is a GST HST special payment, which is coming next week. But other than that, I would say there's not a lot there for retirees and seniors who didn't have employment.
One more question, which we've sort of touched on. Many of the relief measures deal with payroll. What happens with companies that either laid off all their employees or had to close down? It's a good question, but when we think about the objective of the program, as I mentioned at the start, the whole objective of this, the emergency wage subsidy and the wage subsidy program are intended to keep employees working. So with respect to companies that may have had to lay off a lot of their employees, this is hopefully an opportunity for them to rehire those employees. And again, in the backgrounder materials that Finance has released, the stated objective is to keep existing employees and rehire previous employees. So that's clearly something that sort of aligns with the objective of the payroll measure. That's exactly what it's intended to be. In terms of companies that maybe have unfortunately already had to close down, that's an interesting question. Obviously, this is not a relief package for insolvencies for the company, whether the company can now restart their operations and use these subsidy measures to rehire their employees. Again, that's what the program is intended to achieve. So hopefully there will be some opportunities out there.
And we got a lot of questions about that in the last few days, really. I mean, at the end of the day, the employers don't actually have to come back to work unless you make them. Like, there's a whole bunch of employment law issues that we are not talking about today. The point of the 75% subsidy is to hire them back. Whether or not they actually have to do any work or not, that's an employment issue that you need to figure out as a corporation. But you certainly can bring them back, at least on payroll. And if they can work from home, great. If they can't work, that's another issue that you can deal with your employment law group. They don't have to work. You can still get the wage subsidy. In other words, if you pay the employees the wage, you can claim the 75% wage subsidy, whether or not there's actually any work for them to do, right? Because the point of the program is to stimulate companies and employers to hire back workers that otherwise would be laid off and have no source of income. And so I think that's an interesting question that you can revisit. You get into issues of constructive dismissal and layoffs. And again, that's outside of our area. That's the employment law group. So if you are looking at that, it's worth getting some legal advice on the employment law side.
I think that's pretty much all I've seen from the questions. There are obviously lots of questions have come in, and thank you for that. It makes the presentation much more interesting, I think, not only for the audience, but for Jamie and I as well. And although, you know, from what I've seen been able to look through the questions, I think we've probably covered in one form or another the bulk of the questions. Jamie, I don't know if you see anything else there that.
Yeah, I think most of them are similar. The ones we're not answering, we don't have all the answers. I mean, the bottom line is we don't have any draft legislation for the 75% wage subsidy. And that's really where the bulk of the questions are coming in. There's a lot of issues where companies, if you're paying dividends, you're not paying salary, you've got a connected person, you've got connected companies. We don't have the answer. So rather than make up answers, because you've got about 10, 15 questions there that we're just speculating, I don't think that's valuable. I think you guys have lots of insight in terms of the attendees on the call, in terms of, you know, how tax measures have been implemented in the past. So I think we're going to wait. I expect to see some kind of legislation soon. It probably won't be before the Easter long weekend, but I wouldn't be surprised if next week we see something. And I think once we have more detailed legislation, maybe we'll get back together, do another call, and sort of update us all, because I think that 75% measure is very, very important. And finally, just a quick administrative point. We do not intend to release the slides. And the reason for that is because the stuff is changing by the hour. We don't want the slides floating around out there. That being said, Ronit's going to come back on in a second. There's going to be a replay available where you can actually watch the slides as many times as you want and watch that online. But I'd refer you to both Osler's and CIBC's written publications. Those are updated every few days, if not more regularly. The links to those are online. You can Google them. Each of our companies and partnership has a page dedicated to COVID-19. That's where you're going to get most of the relevant information. There is nothing in these 40 slides that is not contained in either the Osler's or the CIBC publications. Dov, any final comments from you?
No, I think you summed it up well. It's really a situation where we have to wait for further guidance. There are lots of questions, and I think the more questions that there are in the real world application of some of these rules, either formally or informally through discussions with finance. We hope to see further clarification from the minister, from the Department of Finance, as to how these rules will apply in a practical sense.
Dov, Jamie, thank you. It really is my pleasure to thank you. You jumped on board 3 or 4 days ago. We put this together. We really appreciate your technical expertise, your attention to detail, and really putting yourselves out there to help us with this Zoom call. And to the participants, thank you for participating. As Jamie said, and Dov said, I think it made it more interactive and a little more interesting. Thank you, everybody. If you're celebrating a holiday, happy Passover, happy Easter. We appreciate everything. Take care, stay safe, and stay healthy.
Thank you.
Thank you. Thanks for the opportunity for letting me wear a blazer and a collar shirt for the first time in a couple of days.
And a tie.
No tie. Thanks, everyone.
Bye.